Millennials actually hold the largest allocation to gold in their portfolios when compared to other generations.
Gold has been a symbol of wealth and power for over 5,000 years. But why are Millennials and Costco suddenly so interested in it now? The millennial age, frequently censored for killing different conventional businesses like digital television and retail chains, is really giving a major lift to one very old industry, putting resources into gold. As a matter of fact, gold as a venture dates as far as possible back to Old Egypt. Late information shows that 20 to 30-year-olds as of now hold the biggest designation to gold in their venture portfolios, contrasted with different ages. By and large, financial backers in the millennial segment have around 17% of their portfolios put resources into gold. This is essentially higher than the generational 10% gold allotment for people born after World War II. How has gold proceeded as an interest as of late? While following the general financial exchange's profits by and large, gold has beaten stocks over the course of the last year in the midst of high expansion. Such a long way in 2024, gold is shown to be a strong venture wagered across all ages, however particularly more for the youthful financial backers. One market analyst stated that younger generations wisely regard gold, Bitcoin and other assets as fundamentally the same thing, vehicles for making money through trading and investing. They would gravitate towards whichever asset class was generating the most profitable opportunities at any given time. Currently, that hot asset is gold, which is where the younger investors are flocking in pursuit of returns, according to the analyst's perspective. However, what's behind this abrupt millennial interest in the old resource of gold? What's more, for what reason is a spot like Costco, everything being equal, battling to keep little gold bars on its racks? To begin with, how about we take a gander at why financial backers decide to place cash in gold by any means? Most monetary councils say that gold has a genuine spot in speculation portfolios, however ordinarily a small one. Gold is in many cases seen as a fence against expansion and monetary slumps. According to a financial advisor, gold performs well during difficult economic times. The advisor did not suggest investing in gold with the expectation of reaping substantial profits, but rather as a means to preserve the value of one's money amid challenging circumstances. The advisor's perspective was that gold's primary purpose is to maintain the purchasing power of investments when intense things are going on in the broader economy and markets. Notwithstanding, is gold really a wise speculation contrasted to the benchmark S&P 500 stock file? Taking a gander at an outline showing spot gold costs over the course of the last year versus the S&P 500, we can see that lately gold costs have pulled away from and broke the financial exchange record. As that may be, zoom out and take a gander at the long haul returns, and the financial exchange has helpfully beaten gold as a speculation by and large. The economy has additionally been doing generally well as of late, regardless of constant high expansion. Wage development is up, and the work market areas of strength for stays. Financial backers' perspectives on gold contrast with other resource classes. While stocks are as yet the number one, gold's discernment as a recent long-haul venture has risen pointedly. Premiums in gold as a venture class has risen remarkably lately, since its peak during the 2008 monetary emergency. As per a Gallup survey in May 2024 on Americans' views of the best long-haul ventures, stock shared subsidies still beat down gold, however exclusively by a couple of rate focuses. In 2023, gold's discernment as a wise venture was really higher than any remaining resource classes with the exception of land. By spring 2024, while financial backers actually preferred stocks and shared subsidies more so than gold generally speaking, there was critical purchasing interest in gold across all segment bunches as per experts. Additionally, the younger generation understood that when any asset, whether a stock or commodity, reached new heights, it signaled a shift or emerging trend. Consequently, they were identifying gold's upward price momentum as an investment opportunity and positioning themselves accordingly based on the technical and fundamental factors supporting gold's rally, according to the analyst's assessment of the divergent mindsets across generational cohorts. This developing prevalence of gold as a venture has even arrived at the paths of discount retailer Costco. The organization started selling 1-ounce 24-karat gold bars in its stores and was experiencing difficulty keeping them in stock as per reports. Wells Fargo assessed that Costco might be making between $100 and $200 million every month just from selling these gold bars at a certain point. Whether gold costs keep on rising, both in item showcases and at retailers like Costco, has a ton to do with the activities of the US Central Bank. Gold costs got a major lift when the most recent expansion information came out high, given financial backers trusted that the Fed would cut loan fees soon. This is on the grounds that gold costs will generally go up when loan fees go lower. It's currently a great opportunity to put resources into gold. While gold is presently hot, past execution doesn't ensure future outcomes, so alert is justified. A young investor provided a balanced perspective on the current enthusiasm surrounding gold as an investment opportunity. This individual acknowledged the temptation to view gold as an attractive buy given its recent price appreciation, admitting that the asset's performance had made her believe that it represented a great purchase at present levels. However, the investor demonstrated a grounded understanding that investing does not conform to such simplistic narratives as perpetual upside. So, did you notice how gold prices have been skyrocketing lately? Yes, indeed, the precious metals ascent has been rather remarkable as of late. However, despite the compelling short-term trend, this individual recognizes that rashly extrapolating such gains into the infinite future would be financially imprudent. So, why is that? Should we not be accumulating gold positions while the investment is thriving? Well, one must consider that soaring prices today do not guarantee sustained positive returns moving forward. The prudent approach accounts for the cyclical, dynamic nature of the markets across asset classes. While one can remain optimistic about gold's prevailing upward momentum, a sober appreciation for the potential reversal of such trends, in line with the immutable realities of financial markets, is crucial. That's a reasonable perspective. But does your balanced approach still include some gold exposure as an inflation hedge? Portion of the reasons 20 to 30-year-olds are drawn to putting resources into gold. 20 to 30-year-olds view gold as a method to bring in cash through exchanging and effective money management. They're attracted to resources that are performing great, similar to how gold has beaten stocks as of late. A few see gold and digital forms of money like Bitcoin likewise to elective speculation choices. Is gold just for safeguarding against monetary slumps? No. While gold is in many cases seen as a fence against extreme financial times, a few financial backers view it as an approach to possibly bring in cash when gold costs are rising, not similarly as a place of refuge. Indeed, while gold can go about as expansion support, its previous presentation doesn't ensure future outcomes. Financial backers ought to be mindful about pursuing hot execution and practice portfolio broadening across various resource types for long-haul achievement. How might regular financial backers acquire openness to gold? As well as purchasing actual gold coins or bands from retailers like Costco, financial backers can help openness to gold through trade exchange reserves that track the cost of gold, as well as by putting resources into gold mining stocks or shared reserves zeroed in on valuable metals. Gold's recent price rises have made it popular with young investors like new college grads. However, stocks have historically provided better long-term returns than gold. While gold can protect against inflation, advisors suggest only a small portion in gold. Before investing heavily in gold, investors of all ages should remember, don't blindly follow an asset's current performance. Past returns don't guarantee future profits for any investment. The wise approach for long-term investment success is to diversify across different asset types like stocks, bonds, and real estate. Don't put too much just into gold. A balanced multi-asset portfolio is generally recommended over chasing short-term trends in one asset class like gold's current price spike. And that's a wrap. If you enjoyed learning about gold's new popularity, give us a thumbs up and subscribe for more insights. Have you got any thoughts or questions? Then drop them in the comments below. And until next time, goodbye.